And one of the differences is that the owners of the most financially profitable law firms pay attention to things that the owners of the least financially profitable law firms do not pay attention to. They don't work harder, they usually work less. They don't have more stress, they usually have less stress.
You're listening to the Profit First for Lawyers podcast, the official companion show to the book Profit First for Lawyers by Arjan Robbins. Now, this podcast is for you if you want to bring home more profit while working less hours in the office, spending more time with your loved ones doing the things you actually want to do, and turning your office into a lean, mean, profit-breathing machine. So if you're tired of working for your law firm instead of your law firm working for you, stay tuned for some really practical insights that will get you the results you've always wanted. It's time to put your BS aside for the next few minutes and put yourself, your family, your firm, and your profit first. Welcome back to another episode of the Profit First for Lawyers podcast. This episode is going to fast track your ability to put your strategic goals in place and start taking charge so that you can have more of the life that you dreamed of when you decided to open your own law firm. Now, Arjan addresses this desire in Chapter 12 of Profit First for Lawyers, and he talks about the key differences between large law firms and small law firms, and really how those differences are pretty small. You might even discover that you're closer to a more stress-free life as the owner of a law firm than you ever thought possible. So here's a teaser from the studio. Let's roll the clip.
Have you ever stopped to seriously consider what separates some of the most financially profitable small law firms from the majority that just do okay? The small differences may surprise you. Discovery of these small changes that you have significant control over, it sure does disappoint all of the excuse makers out there. And one of the differences is that the owners of the most financially profitable law firms pay attention to things that the owners of the least financially profitable law firms do not pay attention to. They don't work harder, they usually work less. They don't have more stress, they usually have less stress. They pay attention to things that lawyers that own the struggling law firms just don't pay attention to. This is completely within your control because you get some of what you pay for with your money, but you get a lot more of what you pay for with your attention. The presence or absence and the quality of each of the following concepts could easily increase or decrease the amount of profit you take from your law firm by as much as 1 full percentage point annually. That could make a big difference.
So what was Arjan alluding to? He was alluding to the key financial reports that you should be discussing with your bookkeeper or your accountant every single month. Now, a lot of law firm owners tune out when the conversation centers around financial reports and money metrics. But I hope that you trust us enough by now to know that we'd never be boring. So let's face it, I know that it's difficult enough to take the time to work on your law firm day to day or month to month, much less feeling like you need to learn a whole new language, let's call it Bookkeeper-ese, in order to understand or to actually use the reports that you're getting from your bookkeeper. Because I don't know about you, but that's certainly not a language that I was ever taught before I started working with Arjan. So today, I'm going to share some really actionable, some insightful, and easy to digest lessons that I learned when I sat down with Sherri Mansell, the director of Bookkeeping That Does Not Suck, and an expert in profit first accounting principles. Sherri has had a long career in finance, including roles as CFO, controller, director of finance, and entrepreneur and co-founder of an e-business consulting organization that helped a lot of businesses. So hang on to your seats for this one, folks, and prepare to have your aha moment. This will make your law firm more profitable. Let's dive right in. Thank you so much for coming on this show, Sherri. I'm really excited to talk about these things with you today.
Oh, thank you for having me.
Bookkeeping and accounting and finances is not really a quote-unquote sexy topic. But there's so much good things that come out of knowing your numbers, right? Like there's so much of the strategy. You can't really have a strategy unless you know your numbers. So what I really wanted to do today is ask some of the bigger questions, see what kind of financial reports that you should be discussing with your bookkeeper every single month, and kind of figure out, let's decode some of this. Let's bring it into layman's terms and make sure that at the end of the day, the audience really comes away knowing what conversations they should be having and why. But let's start with you first, Sherri, if that's okay. What really interested you in bookkeeping, in finance, in strategy?
Well, really, it was quite simple. I mean, when I was in high school, I took a accounting course in my 12th year, and I was good at it. I found it easy. I enjoyed it and I liked it. And so when I went to college, I just decided to go through accounting and really never looked back. I became a CPA and have been in finance and accounting for the last 35 years.
Wow. I honestly, okay, part of what blew my mind in there is I didn't even know that high schools had accounting classes. That's amazing. But what a kind of outside of the box area to fall in love with. What is it about the numbers that attracts you, do you think?
I don't know. I've just always been good with numbers, good with math, good with logic and statistics and things that make sense. When it comes to wording and writing, those were less of my strengths. So I stuck with the numbers.
Now, Sherri, you approach bookkeeping and finances and strategy so much different these days. What kind of led you on this path?
How to manage, philosophy is to really help law firm owners kind of be entrepreneurs of their business. So we do approach things differently. Whereas most bookkeeping firms, if you look at their missions and visions, they're going to say it's all about, accuracy and timeliness. And while that is important for bookkeeping, we think it's kind of inherent to be a good bookkeeping firm, to have, the best accuracy. Our vision is to really empower law firm owners by making sure they really understand the real stories behind their numbers. See, most bookkeepers are working for accountants that want to prepare tax returns. Our mission is to get our clients to use their numbers so they can make smarter and more profitable decisions with confidence. They need to use their numbers in their business. And so they need to look at their numbers every month. And we help them do that.
Two of the things I loved most about what you just said, though, Sherri, is one is to know the story. I like the idea of your numbers being a story because it almost makes it a little more um, fun, a little more approachable, right? Like if I'm sitting down to read a story. But if I didn't know the language, then I certainly couldn't sit down and read it. So I like that you said to know their story. And the other thing that I really liked was that word confidence, right? The mission is to make sure that law firm owners can approach their numbers with confidence. I don't know, that's stuck in my brain to me. It sounds like you really have a passion for helping law firm owners to see these things clearly. Have you seen the way that it has impacted their lives or their law firms once they have kind of decoded and figured out how to read the storybook?
Oh, yeah. I mean, you see when we're having our monthly meetings with them to review our financial package, you'll see that aha moment. You'll see that kind of light bulb click and, oh, now I understand, or I understand why that was so important. Our reports are very comprehensive. So, our month end package is like, 40 pages long. And although that can be quite intimidating, it's really just slicing and dicing the number in different ways to put it in different contexts. And some ways are easier for some people to view versus others. But we walk them through it each month.
I've seen some of the actual bookkeeping calls that your team has had with some of our members. And it's always fascinating to me to watch kind of how, I don't know, conversational. I don't want to say filled with joy, right? I feel like maybe that's too vague, but confidence, I think, is what it is, right? There's a certain amount of fun that they usually always have. There's a certain amount of clarity and confidence and fun.
And you're right. And one of the reasons why when we meet with them monthly that they seem to have that understanding and confidence is with our program, when they're onboarding with us, usually onboarding is a 3-month process. We also offer a crash course that does teach them financial literacy, the basics of financial literacy, as well as how to engage with their bookkeeper to be a successful consumer of bookkeeping. And so they have some knowledge so that when we get on the phone to talk, we're speaking the same language, basically. Some of the biggest aha moments are when, members, a lot of times lawyers or small business owners, see profit on their income statement or a profit and loss statement. We call it a P&L. So they see profit and they're like, wow, I got profit. I can spend money. And they think they can spend money. And what they don't realize is profit is not necessarily the same thing as positive cash flow. So there's a difference. And so during our crash course, we teach them that your break even in profit is not the same as break even in cash flow. And that's usually a really big aha moment for them to understand there's certain things that hit their balance sheet, such as purchasing fixed assets or paying down loans or paying themselves distributions, that cash goes out of their pocket but does not affect the P&L, does not hit the expense. So that's one of the biggest lessons when you see the aha moments.
Well, let's transition a little bit into what kinds of reports should you be discussing with your bookkeeper? Should you expect your bookkeeper to give to you every month if you want to make strategic use of the numbers and actually have a story, right? So in your very, very qualified opinion, Sherri, what are the most important reports to be discussing with your bookkeeper? And let's make sure we tack on why.
Here at, How to Manage, we teach that there's 7 key monthly reports that, every business owner should be looking at every month. One is the balance sheet. And the balance sheet is what lists all of your assets and all of your liabilities and your net equity. And that's a very important report if you're ever going to go to the bank, and important for you to really understand your true liabilities. It's important to make sure you're looking at your balance sheet from your bookkeeper to make sure it's complete. We see a transfer of money come from an account, we never heard of, and we're like, what is this account? Oh, I didn't tell you about that. That's another business account I have. So it's very important to make sure your balance sheet is complete and it lists all your business bank accounts, all your business credit card accounts, all your business loans, line of credits, SBA, idle loans, all of that. So that's important. The other second one is the profit and loss statement to know your profits. Obviously you're in business to be profitable. And both those reports, we highly, highly recommend that you're looking at on a rolling 12 months so that you can see it as trending. So as you see trends, that's what helps you spot things, identify things, ask questions, and really get to know your numbers. The third report, which is important, is your budget variance report, right? If you want to go somewhere, you need a map, you need a plan. Otherwise, you're not going to get there. And the budget, you should have a business plan, and your budget should align with the business plan. But you should have a budget every year, and your bookkeeper should be providing you with budget variance reports on a both monthly and year-to-date basis to see if you're moving along according to plan. The fourth report you should look at every month is your accounts receivable report. For lawyers, you should have very little accounts receivable if you're kind of enforcing the rules of replenishing your trust, or what we call rubber band policy, stop working on the file until you replenish the trust. So lawyers should have very little AR, but if they have AR or accounts receivable, they should be looking at that monthly to collect it, because once it goes over 90 days, it's usually not collectible because you've already done the work. You've already incurred the expenses. So whatever you collect now is all profit to you. If you don't collect, then you basically worked for free.
Can I ask really quickly, Sherry, you mentioned there's a, rubber band policy. Is that a common terminology that I don't know, but most lawyers will? Or can you give us kind of a rundown? What is that?
That's more just how to manage policy or method that we teach. You know that you should put a red rubber band around that file and stop working on that file when the client has exhausted their trust retainers and there's no more, money to work on that fund, because if not, you're working for free. So we've talked about the balance sheets, the income statements, the budget variance reports, and accounts receivable. Another report is your work in process report to kind of understand what cases are open and when you expect to close them and how much revenue you expect to get from them. That will help you forecast your cash flow. The other report is a cash flow forecasting report, which you should be doing regularly. Uh, if you're in a cash crunch, weekly is ideal, at a minimum monthly. And one of the most important reports is your three-way IOLTA trust reconciliation every month, where you're reconciling your client matters in your case management system with the client matters in your accounting system that have come from the bank. So it's the bank, the accounting, and the case management system. So those are the reports that, regardless of what bookkeeper you're working with, that you should be looking at every month.
Now, does it make a difference if the law firm bills on a contingency basis or not?
No, you should be looking at the same reports. If you're billing on a contingency basis, then your WIP or your work in process report is going to look very different than a flat fee firm, a different format, but the reports are the same.
Yeah, so basically what we're getting at is if you own a law firm, no matter what practice area or what kind of fee basis you have, these 7 reports are basically your guidebook, right? This is how to make sure you are on strategy, that you know your numbers, and that you can read the book so that you can get to where you wanna go.
And that's the important point, is that not only that you look at your numbers. Too often when you turn over financial statements to a business owner, they set it aside. Maybe they intend to look at it, but they don't make the time. So definitely schedule time on your calendar every month to take an hour a month to actually sit down, sit back, and look at your numbers and understand your numbers. And if you don't understand something, ask your bookkeeper questions. Ask questions, and if they answer it in a way that you don't understand, then ask again and say, "I'm sorry, I don't understand that." It's important that you understand your numbers. You are the owner of the firm. You're at the helm of the ship, right?
Yeah. How much time should they be spending with their bookkeeper every month?
It depends. It depends, what stage you are in your business and are you in a cash crunch or not, right? Is your IOLTA clearly reconciled? So, at a minimum, I think you should set 30 minutes on your calendar every month to look through your financial package. And if things are kind of running standard, of course, again, you want to look through because it gives you a chance to kind of step back and look at your business from the big picture, kind of get out of the weeds and see what's going on. But as things are going on, if you're in a cash crunch, and cash crunches aren't just they could be for very good performing law firms. You can be in a cash crunch when you're growing fast, right? The faster the growth is going to cause a cash crunch. So it doesn't mean you're necessarily managing the firm bad. You could just be growing. Or in the situation where you're, just spending way more than you're collecting, and, that's a different situation. But if you're growing and you're in a cash crunch, you should be doing a weekly cash flow forecast. And so you need to be sitting down and either doing that yourself or with an advisor, a financial advisor, or, with usually a bookkeeper won't give you advice and forecast numbers for you, but they can kind of help walk you through how to, do it. As a business owner, only you know and can forecast what's coming up next. Also, your trust, your IOLTA trust reconciliation, when you do a three-way reconciliation, it's imperative that you're clearing any discrepancies that are found in the reconciliation and that you clear them within 30 days to remain compliant with your state bar. So again, if you have more discrepancies, you're going to have to spend more time researching and clearing those items. But the important thing is as you're researching them, if you can find the root cause of any discrepancies and kind of fix that so those things don't reoccur, then you will spend less time in the future having to deal with them, because you'll kind of tighten up the processes in your law firm so that those things won't happen so often. I mean, you always have human error and you expect some differences occasionally, but when you're having 10 or 20 differences every month, that's too many.
Hey guys! So, quick note here, we really wanted to make sure that we weren't just giving you profitable concepts, but that we were also providing some resources to help you take action and see the results in your own lives. Now, some of these resources are going to be downloadable, some of them are going to be watchable, and others will be live, but all of them will be offered to you completely for free, no strings attached. Now, we do host a Profit First for Lawyers workshop several times per year all over the US, and Arjan has finally agreed to let me offer it to our listeners again for free. So if you're ready to get serious about making your law firm more profitable, click the link in our show notes below and reserve your seat now. Now, fair warning, we do cap attendance at these events to make sure that attendees get some real laser focus on the things that are important to them. And we do always run out of seats, so make sure that you've snagged your seat. If you want even more insights and even more Arjan, don't miss it. What information do you answer a lot that we can tell our listeners now so that they can have a jump start?
I'm going to tell you the three most common. One is, why do we create two sets of QuickBook files, one for the law firm operating business and one for the IOLTA trust account? Not all bookkeepers do that. I- there's no right or wrong, but the reason we separate them is one, because as lawyers know, the IOLTA money, the money in the trust, is not theirs. It's the retainers from the clients. It's not theirs. And they're not allowed to use those funds for anything in their business at all. The number one reason lawyers get disbarred is for mismanaging their trust or commingling their funds. So the trust is extremely important so they don't lose their license. So the reason we put it in separate books is to really reiterate the fact that this is separate money. You cannot use it. And then if they do get a bar audit from the state, we can turn over those books and they're just those books. Nobody gets access to what's going on in their law firm. So those are the reasons we do that. Another common question we get is, why you used such a detailed chart of accounts. So most bookkeepers, again, remember, most bookkeepers are doing books for tax preparation purposes, and they don't need detailed categorization and coding for tax returns, right? So they'll just have revenue, payroll, rent, office supplies, and they'll keep it very simple, which is okay for tax purposes. And there might only be 20 or 30 line items, maybe 40 at most, on a profit and loss statement. But our profit and loss statement has 150 lines. So it does take more time to code, more thinking, more process, more attention to detail. And the reason why is that level of detail. Again, we're producing books so you can make business decisions, right? And so with that detail, we can produce more comprehensive reports, analysis, charts, graphs, different ways for you to see the information and for you and your advisors to analyze your, information. If somebody is not working with us, they're not working with Bookkeeping That Does Not Suck, and they have another bookkeeper, we highly recommend, well, one, we'll share our chart of accounts. with people, even non-members, and encourage them to use our detailed chart of accounts. But we understand why some bookkeepers may not want to do that. So at a minimum, we say, okay, maybe they don't have to be as detailed, but at least get your bookkeeper to break out payroll and marketing. Those are the two largest expenses in a law firm. So we break out payroll into different departments, right? The owners, the associate lawyers, the paralegals, sales and marketing, which includes intake, and then support and admin. And then if they have any like C-suite advisors, that would be a sixth category. And then each one of those we break down into wages, payroll taxes, bonuses, and benefits. So it's really, really important at a minimum to break down payroll into those departments, because that is the largest expense for a law firm, and you're going to want to do some labor ratio analysis.
Wow. Sherri, you dropped some serious knowledge on us just now. Okay, so I'm a law firm owner. I'm listening to this episode now. I know what my goal should be. If my bookkeeper or accountant isn't already getting me these reports, how do I have the conversation with them that, hey, this is what I want our monthly transactions to start looking like. These are the things that I want moving forward. And as a follow-up to that, what do I do if I don't get that?
You're the owner, and you should be able to demand to see the things that you need to see. And those are very reasonably requested reports from any bookkeeper. And they should be able to answer your questions too. And, and if they're not answering your questions, or not answering your questions in a way you understand, then that should be a red flag for your bookkeeper. One other thing with bookkeepers is it's important to get this information timely. I mean, if you're looking at, November information in February, it's useless. It's old, right? So we get out reports on the 8th business day of every month, following the month end. But we recommend that you should get them no later, absolutely no later than the 20th of each month. So that's another thing you should expect of your bookkeeper.
That is really good information. Thank you for that, Sherri. I mean, we've talked very cerebrally about what we should have. Let's connect it a little bit to what will my life look like if I do get more serious? Because I know one of the things that Arjan says all the time is that one of the biggest hurdles, or one of the biggest challenges that that we have, is that most law firm owners are really uncomfortable with their numbers. They don't always want to look at their numbers, and so they can sometimes hide from their bookkeepers, or they prioritize other things.
You're right. I find that lawyers are like the smartest people I've ever met. They're all so smart and they're great people. However, the majority of them are intimidated by the numbers. So you kind of gravitate towards things you like to do or want to do. And so they put the numbers aside. I do think scheduling time, 30 to 60 minutes a month, to look at your numbers, and forcing yourself to do that, over time, it gets easier. And the biggest thing, even though, like I said, lawyers are so smart and they know the law, but some of the biggest areas they get in trouble is not filing tax returns and not keeping their IOLTAs compliant, right? Um, so what happens is there's always a handful of lawyers that don't do that. I mean, life gets in the way. They're busy. There's other priorities. Their intentions are good, but they don't get to it. And a month goes by, and then 2 months goes by, and then 3 months goes by. And then sometimes before you know it, 9 months goes by, 12 months, 18 months, and then they get an audit. And then they call us in a panic. Now, trust me, we're really, really persistent. We call them, we write them, we contact their advisors. We're really persistent, letting them know that these discrepancies need to be resolved, but we can't do it for them, right? So then they get a bar audit, and they get a notice that they're under audit and they panic and they call us in a panic. And basically they they don't know where to start. And it's that becomes usually stressful because they could lose their license. So then they have to stop everything they're doing. I've seen lawyers just have to cancel trips, cancel all their appointments, stop everything they're doing, and they'll just dedicate like 8 hours a day for 1, 2 weeks just fixing the trust account when all they had to do was just kind of do it along the way when it's fresh in their mind and easier and less stressful, and not get themselves to that point.
What I'm really hearing from that, and what I think is so magical about those examples, Sherry, and I'm really glad that you shared that because I think sometimes that paralysis of I do want to just call it the paralysis of shame, right? Where you just kind of feel like I'm so deep in the weeds that it feels like an insurmountable mountain at that point, right? It goes from being a pebble in your shoe to being just a mountain that's crushing you.
When people come to us, a lot of times it's already, they feel like it's insurmountable and overwhelming.
Yeah.
And you could just see in their face the pain and the stress that's there. And when you say, look, let's just start today. This is how you need to do it, and kind of give them some instructions, what you need to do going forward.
What I'm getting out of these stories, and for anybody listening, if you're in such a situation, is it's not too late. You can take that mountain of weight off of you.
And that's a really good point. You can just start fresh, have a fresh start, because then let's say we start March 1st. Well, if we can keep March 1st reconciled, and everything's reconciled to the penny and clear any discrepancies, and then April, and then May, and then June, and then July. And then if you do get an audit and they see that you have this $100,000 or $200,000 discrepancy prior to March 1st, right? But that you've kept it clean for the last 6 months, while you're working on cleaning up the past, most auditors most often would be much more lenient and willing, to work with you than somebody when you go to do an audit and it's just the problem's continuing and hasn't stopped. At least you've recognized you had a problem and you fixed it on the go forward.
I love that, Sherry. Okay, let's do a quick recap of those 7 main reports that you should be getting from your bookkeeper or your accountant every single month. So it was the balance sheet, the profit and loss statement. What was number 3?
Budget variance report, monthly and year to date, your accounts receivable, your work in process, your cash flow forecasting, and your three-way IOLTA reconciliation. And again, you want to see the balance sheet and income statement in a rolling 12-month so that you can see the trends.
Thank you so much, Sherry. That was super helpful. If anybody listening has any additional questions for Sherry, feel free to send us an email at podcast@profitfirstforlawyers.com, and I'll make sure to get those questions to her, and we'll have her back on to answer those. Sherry, can I switch tracks a little bit now? We've talked an awful lot about financial reports and strategy and knowing your numbers and being more profitable. So now I'm going to turn it around on you. Is there a piece of advice that you have been following in the last year or so that has made your own life more profitable?
Biggest advice I've received, and I try to focus on, is to get out of the weeds. I tend to be, accounting, being a very detailed, attention to detailed person. And as I'm managing my team, sometimes I get very involved in the day-to-day operations and tasks. And so it's really important, as a manager and as a leader, to step out. So at least, once a week, to kind of set some time to look at things from the big picture and more strategically, and make sure we're focused on the right things and not kind of diverting and going down other paths, that we're staying focused on our goals. And that goes back to what I said to lawyers, is spend that time once a month looking at your, spend an hour on your calendar once a month recurring to look at your financials, because especially your budget variance reports, because that tells you if you're on track and helps you start thinking bigger picture and looking at your business, kind of from the top down, and get yourself out of those, day-to-day weeds and operational tasks.
That is such great advice too, Sherri. And it reminds me a little bit. We had Alejandra on Allie on the show last season, and she did an entire episode about how important it is for law firm owners, for business owners, to really get above the clouds, right? To see the long view, to have that strategy. We'll go ahead and link that episode in our show notes. But thanks for bringing that today. That really adds a lot of value, I think, to this specific topic.
Well, thank you, and I welcome any other additional questions anyone has.
Hey guys, if you want to hear this in real time, Sherri offered to have some of her actual bookkeepers that do not suck ask their clients if their actual bookkeeping calls could be recorded so that you can hear what it sounds like to have a productive meeting with your bookkeeper and discuss the reports that she just mentioned in this interview. And some of those clients said yes. So if you want to take a listen to those, go to profitfirstforlawyers.com/action. Thank you for joining us on another episode of Profit First for Lawyers. If you're enjoying what you're hearing, tell a friend. And visit profitfirstforlawyers.com/action to download the resources that are going to help you put these concepts to work for your law firm. Your future self will thank you for it, and we will see you next time.